Hey guys, I wanted to do a real estate investment focused video. We get a lot of different people that are like, hey, I'd really like to start investing in real estate, but they just don't even know where to start. And this is very generalized, but there really are kind of three tiers of investing. There's the very active, you find the property, you fund the property, and you manage the property. That's your active investor. The next step down would be your passive investor. They have a relationship with an active investor and they're investing directly into that deal. And that would be a much more passive thing. You're really at that point, you're vetting the investor almost more, really more than the investment itself, because you're not really the real estate professional. You're not going to put in the tens of thousands of hours to learn it. So that would be your passive level. And then there's the very passive level, which really is you're talking to your fund manager or your investment wealth consultant, whatever, and you're telling them, hey, I want to be in some sort of a REIT, a real estate investment trust, or I want to invest in some real estate. And that's going to be a publicly traded. So somebody like that active real estate investor, once they get to hundreds and hundreds of millions of dollars, billions of dollars, they might have a publicly traded company. That's what you would be investing in at that stage. And that's a very, very passive. That's like paper trading. You're just, you know, super out of the loop. So you have your very active real estate investing, passive real estate investing, and the super, super passive real estate investing, which is really just a paper asset, all done through Wall Street investment funds and stuff like that. So as you're looking at which one of these three you should be involved in, you have to consider what the different benefits are. The benefit to being a very active real estate investor is you're going to get all of the tax write-offs. You're going to get probably more full amount of profits. You're going to get all of those gains. As you step down, you're basically you're reducing the amount of control that you have over the asset. And you're reducing a little bit of the profitability because you have to split that. You have to split it with the person that's managing it. They're not going to do it for free. And then once you get down to the REITs and the real estate investment trusts and the paper assets that you're trading on Wall Street, you're really going to be watering down your total returns. And your amount of control is basically zero. You don't even have a phone number to call up to talk to the person that's managing your real estate asset. And you don't even know what real estate asset is owned by that corporation because they probably have 50, 100, hundreds of them. So, but the ease of being able to buy and sell it is super, super fast. So those are the different, again, very generalized, but those would be like the three different levels of real estate investing. So when you're considering becoming a real estate investor, look at the benefits of those three levels and the pros and cons basically of them. So I hope this video kind of laid out just some real general stuff. If you're ever considering investing in real estate and you just have some questions about it, always feel free to reach out to us. Love talking about that type of stuff. You can ask for me specifically. I do a lot of that mainly in our office. I hope this video helped you, and we'll talk to you next time.